Welcome to the NEREJ NYREJ podcast. I'm your host, Rick Kaplan. Today's podcast is sponsored by Cassidy Paving. Contact Cassidy Paving at CassidyPaving.com for all your paving needs. To be a sponsor on our podcast, contact me at rkaplan@nerej.com. And today's guest is David Fields, and he is the CEO of Acquios. I knew I was going to screw up the name. I told you I was going to screw up your company name. How do you say it?
It's Acquios, so an acquisition
Acquios.
operating system for deal teams is sort
Okay.
of the focus. Yeah.
All right. Well, see, I came through and screwed it up. So, David, tell us a little bit about your journey on how you got to where you are today. And it's an interesting one because I read about it. So,
Yeah, no, absolutely. I mean, have spent most of my, time in my career as an investor, primarily focused on real estate. And that really kind of led me, into Acquios. But to kind of start a little bit at the beginning, I studied economics at Harvard. I had a really fortunate opportunity to work on my senior thesis with this guy, Ed Glazer, who wrote a book called Triumph of the City, which is like he's one of the preeminent sort of economists around, real estate economics. And I wrote a paper on like supply dynamics and impacts of regulation and permitting and things like that on pricing. And so I was always just very interested in real estate, had a unique opportunity to go work at Disney straight out of school doing M&A at corporate. And so got to work on stuff across, their real estate portfolio on kind of like the theme parks and hotel side, but also got to work on Pixar, a pretty large and well-known acquisition there as the sole analyst. And so, got a lot of experience sort of on, the finance M&A side, but really was passionate about real estate. So moved to a company called Region Properties, we were a real estate private equity firm. I managed acquisitions across all asset classes there. And then had a unique opportunity to go work again with the former Disney CEO, Michael Eisner. He had started a family office, and I went over to head up investments for that family office. So was investing in real estate, but also, a lot of venture and private equity deals. And that's where I got excited to build something. And, with the advent of ChatGPT, it just, really felt like there was a, massive new wave that was going to be really important, to enterprise and kind of a new way of working, and, partnered up with a couple of great co-founders I met, during my time there, and started to build what's become Acquios. And really with Acquios, we built a lot of the tooling that I wish I had when I was managing acquisitions. It's really everything for the deal team, from deal pipeline management to AI-driven underwriting. We have a really flexible sort of model that can output into your financial model templates. So you don't need to change how you're working sort of in Excel today, but really accelerates your ability to see lots of deals, score those deals in your buy box. And then we have a comprehensive due diligence management system as well, that allows you to, accelerate that process. AI pre-screens all of those deals, is flagging risks for the team, so you can really orient the team towards the things that matter, either killing deals, before, you spent tens of thousands of dollars in diligence, or, really orienting around the issues that are critical to pin down before you move forward.
very interesting. All of that is very interesting. But, I like how the start of working with Disney, and we'll get into the AI. I know that's an important part of what you want to talk about, but this Disney job that you had, were you locating properties, or are you just relocating people into the Disney properties?
Yeah, so the Disney job was a super unique one. So it was a corporate group. So we were almost like an internal investment bank or consulting firm, at corporate Disney. So we were located at the main headquarters in Burbank. It was a team of about 40 or so when I had gotten there, and we worked across the whole company. So that's why I spent time working on some important strategic projects for, ABC and ESPN. I worked on the Pixar acquisition when we acquired that business. I also worked on a very, large investment. We did like a $3 billion investment in the cruise ship, sort of area, so more on like the real estate side. But it was really more of a corporate M&A role, so kind of spearheading a lot of the investments and acquisitions that the company did across all of its businesses, not just on the real estate side.
So was the main office in the park itself, or it was outside the park?
No, the main headquarters is in Burbank. So that's where.
I've never been there, so I'm not sure where.
Yeah, yeah, no, I mean, the Disneyland is down in Anaheim. So, our headquarters for my current company is in LA. So Burbank is in LA, and Anaheim's about an hour south, which is the park here. But yeah, that's where ABC's headquarters is. The animated studio is located there, and that's where kind of the corporate offices are as well.
So it's interesting because like Pixar, you know, they uh, pretty much make movies. That's their business. Now, uh, so do you try to buy locations, or does Disney try to buy locations or find leases for locations for movie projects?
Yeah, I mean yeah, there's definitely a meaningful sort of location and kind of real estate business within Disney. I'd say kind of two components of that. One is more on like, the office, like scouting side, studios build out. But then real Disney was also part of real estate company, right? It owned and operated a number of hotels, at its, theme parks. Obviously, the theme parks themselves are really unique real estate businesses. We had, the cruise ship business, which I was mentioning, our floating hotel business. So, it kept everything very interesting because, I don't think any of Disney's real estate is that typical. Maybe hotels are like the most, kind of typical component of their business. The theme parks quite unique. But there's a lot of expansion that's been done there, opening in different geographies. But yeah, for the most part, we were focused on like the larger, okay, buying the whole company of Pixar, where, there were people on the Pixar team and on the, Disney team that were focused more on the, real estate components of leasing space and stuff for, for the companies specifically.
Now, let me ask you a question, and because I don't know if this is a true thing or it's not. When Disney was tired, or their parts of their parks were tired, and they wanted to retire them, they would just close off those areas and abandon them, and then move on to another area and then set up something more current. Is that true?
Well, I mean, it sort of depends on the parks. I think like so, Disney World has a tremendous amount of space, right? They were able to aggregate a lot of land, right at the beginning, pretty famously. I mean, I don't know if you're familiar with that story, but Walt, when he was aggregating the properties in Orlando, had dozens or hundreds of like different entities and different people who were kind of running around and didn't want to be tied together, so they didn't get extorted by one landowner holding out. And so they amassed a really significant piece of property there. Obviously, in California that was a little harder to do, and so in Anaheim there's more limited land space. So yeah, they're definitely any piece of land in Anaheim is being repurposed, and is often repurposed, right? They want to revitalize different areas, and there's a whole economic model behind that, right? These rides, a new example, right, is the Cars, sort of land was, I think, a newer one that was opened in the last number of years in Anaheim. And individual rides can be 150 million dollars in terms of the capital investment to build that out. And so they're thinking about the return on that investment, how it might drive additional or recurring visitors. And so it's both kind of a business and creative decision on how those changes get made.
Okay, well, now we'll move on to more of the current stuff. and what you're doing today. AI, which everyone knows is like the hottest thing on the in the country or the world right now.
Yep.
But now you're implementing it into real estate transactions, or how a company, a real estate brokerage firm would operate.
Yeah, so yeah, kind of going into when I was really, focused more on real estate, managing acquisitions for Region Properties and then, doing that as well, for Michael Eisner and his family office. When you're operating on the acquisition side, for the most part, you're, receiving some initial documents, you're getting, OMs, T12s, maybe Argus models, different things like that. And, you're largely having analysts and the team are living in Excel. They're, trying to take that messy information, bring that into the financial model, go and do market research, validate information, as we all know. Broker OMs tend to be a little rosy, in terms of their projections. So, you're not taking those at face value. You're, really digging into different market components. And then, once you sort of feel you've moved to an LOI stage, now you're getting dumped with, hundreds of documents potentially, right, that all need to be reviewed that, either by internal teams, lawyers, consultants. And that process is often managed largely just by, maybe an Excel sheet or something where you're tracking documents that you're receiving. And, there's a lot of work to be done there. I know, probably every one of your listeners can relate to, if you meet a broker at a conference, and you give them your business card, you're all of a sudden going to get, a deal a week, or a deal a day, from that broker. And so, most people are inundated with opportunities that they could be looking at. And so they've got to quickly filter those things. Maybe they're filtering them, well, but they're probably missing some opportunities that might be in their buy box. Maybe it's a market they're a little less familiar with, so they haven't dug into it. And there's limited bandwidth that you have on your team to underwrite. So really, what we see with AI, and I think we're kind of in, I think most companies right now, especially in the real estate space, I would say are in kind of like phase one of AI, right? They've started to adopt either Copilot or Claude. They've rolled that out to some number of people on their team, maybe their whole team, and it's incredible as a tool, right? It's a really powerful tool that can help you shorten the time to do research. It can kind of help you shorten the time to build out Excel models, and it's pretty incredible what it can do for you individually. What we've really built is what we see as sort of the next phase of AI, which is a way in which AI is fully integrated into your organization and into your system. So not only can you do things that are, really helpful on a one-off deal, you're actually aggregating all of this data that then gives you an advantage on the next deal that's relevant, right? So if you think about Acquios, what Acquios really does is it enables you to, upload an OM, upload T12s, different messy data, and that gets extracted, and the AI is actually underwriting that deal like an analyst would. So it is going out and validating market data, sales comps, rental comps, demographic information, tax information, insurance information, kind of all aggregated and validated. So it's comparing that against the documents that have been provided by the seller, and it's coming up with that first cut underwrite, and it's scoring the deal. And so, now a team, has the ability to process a lot more deals, see what's in their buy box, and be able to have the analysts and the principals really focus on the ones that are important and kind of get into the meatier part of the analysis. Like, what do we actually think about long-term growth rates, or, what do we think about, rental, comp opportunities and where this can scale up, or value add opportunities. So we're really freeing up a lot of that time and allowing a much more deals to be processed in a high quality way and kind of screened in a high quality way.
So if you're a broker, and I'm going to simplify this a little because that's my mind, everything has to be simple. So if you're a broker, right now you have probably three, maybe four people in your office that are doing all your research and doing all your processing of any kind of contracts or paperwork. You have yourself, and you probably have I, some other type of assistant in there. So you probably have about four people that probably go through all the 4 to 5 people, I would say, go through the whole process of doing transactions with a client. You, are you telling me that the AI will now cut down that process? You don't need as many people, and you can take on more clients to do more transactions in that same period of time that you normally do one.
Yeah, I think that's largely right. Like our software is really focused on kind of the equity, firms. So it's the companies that are doing the investments, not as much for, kind of brokers today. Because we think the needs are a little bit different, right? Brokers are managing a number of potential investor relationships. It's a little bit more sales driven, kind of what they're trying to do. Our platform's really about getting to the underwriting truth on a deal, and it's leveraging a lot of the information that you fed into it. We kind of work pretty closely with our customers in the onboarding so that we understand kind of what their underwriting assumptions are. Are they more levered IRR focused? Are they more cash on cash focused because they're going to hold this over the long term? What are the things that sort of drive their core decision making? And now the model will understand that and be able to score those deals based on your specific firm's buy box. So it's really intended to help accelerate the acquisition process for real estate private equity funds, for family offices, for groups that are making those investments, because most of those teams are pretty lean, and they want to be able to process as many deals as possible to really get to, well, what are the best ones for us? What are the ones that really tick kind of all of our boxes, and we have the most conviction that we can move forward. And with a lot of these deals too, speed to market, speed to getting back to brokers and engaging around a deal, is also really helpful in getting to close.
So using this, if you're buying a new corporation or a new company that is kind of an acquisition for your company, it's just a kind of an add-on or helping to cut down on some of your competition or whatever you need to do to buy that corporation that you would go through AI, your company would go through Aquis. I'll
Acquios.
get it right before the end of this. And your company would go through, process all of that, make show that the deal is a viable deal, and then process the whole transaction from that point.
Yeah, and this is just to be clear, it's specific to, buying assets. It's buying properties, right? It would be buying multifamily, industrial, self-storage deals. We have a number of customers across all of those verticals today. We have groups who are using it across multi-asset, including, retail and office. We're servicing family offices, multi-billion AUM funds. We have some public REITs now, who are also using the platform. So it's really meant to enable them to accelerate their underwriting of different properties that they're evaluating. And so that's kind of the underwriting side. And then we also have a really powerful due diligence piece of the platform as well. So really takes you from deal pipeline management to underwriting, all the way through to closing the deal. So you can project manage the due diligence process. AI is pre-screening every one of those documents, permits, reports, leases, flagging critical risks so that you and the team can really hone in on, well, what are the risks that might blow up the deal. Doing that before you've spent tens of thousands of dollars with lawyers and consultants. I've definitely managed some processes in the past, which I wish I had found a smoking gun document sooner. But 3 weeks into the process, you realize, oh, this is going to potentially blow up the deal, or will blow up a deal, and you've spent a lot of money already on diligence with lawyers and consultants. So this really allows you to have that pre-screen. Again, this isn't, finishing the work of underwriting for you. This is giving you a really high quality financial underwriting of the deal, investment memo on the deal, that you would get from a really great analyst or senior analyst. But you're going to then really dig into those numbers and make changes and tweaks, and really, kind of get at the answer for your firm. Similarly, on the due diligence side, it's still meant for humans to be in the loop and reviewing all of these documents, but AI can do a lot of that pre-screening and at least get the team to orient around the things that matter quickly.
Now, Aquas is a, see, I said it right.
You did.
Aquas. I told you by the end, I'll know it by heart. Um, but you're selling, this is your software.
Yes.
So now you licensing this to other companies similar to what you do.
Yeah, I mean, we are purely a software company.
Okay.
We're not doing. I mean, I've done a lot of real estate investing.
Right. Right.
Previous to this, that's sort of the lens I brought to building the software. But yeah, we're a software platform. We license our software. We also have done a number of sort of more custom implementations where we can tie into existing deal CRMs that people have, data feeds that they're already utilizing, to sort of customize some of the aspects of it for a larger potential customer. But yeah, this is a software service. You can check it out at Acquios.ai, and really understand sort of the full capabilities of what you can do when you have AI as a part of your entire acquisition system, not just a tool that individuals on the team can utilize.
So your clients are basically a real estate brokerage firm, a law firm, maybe, uh,
Really an equity firm. It's
or equities
investors.
firm.
Yeah. It's large. I mean, we have some larger family office or individual kind of real estate investors, but for the most part it's shops that are set up for acquisitions. Maybe they're doing they have 100 million, or billions potentially under management, and this is a tool that can really accelerate how they go about their acquisition process.
Now, so and one of the key words you just said was management. So it manages the that asset transaction
Yes.
basically.
Yeah, no, I mean, I think that's where AI is extremely helpful, right? It can accelerate your ability to go through these transactions. It can, take your timeline of first screening of deals, down from I think for a lot of groups it's probably a week or a couple weeks to, really underwrite a first, pass of a deal. Our system does that in a few minutes. And so, that first pass now gives you the ability to do first passes on lots more deals, because, it's not another deal that, at least for the screening, falls on the analyst's desk. The screening now gets done by the AI, a kind of an initial screen. And so the analyst now can focus on, out of the 100 deals you pre-screened, maybe 10 of them actually scored in your buy box. And so the 10 that scored in your buy box, those should really be the 10 of the 100 that, the analyst and the team really dig into. And that's how we sort of view the platform, is it's giving time back to, the analyst team. It's not about spending time in financial models and, seeing if there are errors in the model. It's giving them the ability to focus on, okay, do we believe these rent growth assumptions? How do we feel about the submarket? How do we feel about the comps in this market? How do we feel about supply? All the things that actually matter, on the deal, versus, some of the stuff that's more, the manual, grunt work stuff that I am very familiar with, having, done it a lot early in my career.
So now AI is known because it for the way it pulls the information. It can pull information from all over the world.
Yeah.
So uh, if someone is doing a transaction that's similar to what your client is doing, your software now will pull some of that information on that past transaction, maybe that might have been done in Europe somewhere, but it was a successful piece of that transaction. So now that will bring it into your software to try
Yeah,
to.
well, I think data is a really interesting area here where, now with AI, you are able to aggregate a lot more data. So we've built some unique, proprietary data sources ourselves, specifically around things like rent comps, where we're able to have AI agents scraping websites, actually calling and confirming, web details, with an AI caller, calling and doing that. So we're building out some, first party sort of data sources. All of our customers, as they are bringing in, data into the platform, that all sits as data that's, part of their specific instance. So we don't share data across customers. But as you look at more and more deals yourself, all of the data that you're aggregating, all of those sales comps, that all becomes part of your knowledge base. And so as you look at more deals in that specific submarket, all of that information is now more data that can be utilized to inform the AI and underwrite the deals, more accurately.
Well, that's a good answer because that was kind of the question I was asking because I was trying to figure out how do you kind of limit where it's getting its information because sometimes it can get information that might not fit exactly what because it pulls from all over the world. And I
Yeah,
know,
no, and that's a lot of I think where sort of that's where like the sort of secret sauce of like what we've built really lays, right. I mean, I think a lot of your audience has probably seen how powerful Claude can be and how powerful ChatGPT can be, but also how it makes errors and it hallucinates and sometimes it seems to make very silly errors, where it's like, well, why would you have comped it to this thing? That's not an apartment building. That's that's a student housing building or something like that, where it's
right.
it's not, exactly right. So think of Acquios as really a company that specializes in building agents and agentic logic that brings a lot more of the analysis into things that are more deterministic. I don't know if your audience is familiar with this term, but one of the reasons why AI can kind of do things that seem silly or kind of go off the rails is because it is non-deterministic. It's making certain determinations, and if you run that analysis 10 times, you might get 10 very different answers, or 10 answers that are in some band. And so a lot of what we're building is something that really um, you know that really condenses sort of that variance band. Obviously, if you had two fantastic analysts underwrite the same deal, there's probably going to be some variance, right? It's not like there's a right answer to like what's the exact value of this apartment building, but there's a reasonable band that should fall within. And that's really the secret sauce of like what we've been developing.
Well, and I've talked to a lot of attorneys that have implemented AI in their firms. And one of the things that they say at the end of after everything is said and done, you still have to go through everything, make sure everything is properly put in and done right.
100%. And I'm glad you brought that up because that's also the other really critical piece to how we've built our platform. So if you're using Claude, you might get some source level understanding of, okay, this is why that was weird because they pulled from this source and it's 5 years old, or, it's not relevant. So everything in our platform is citation sourced. So you can chat with every one of the documents. Every risk that gets highlighted has a citation to where that risk got pulled from in what document. So you're able to track all of that. And similarly, on the financial model side, and this was really important to me, I always would ask my analysts, okay, like I want to go through all of the assumptions. every one of the assumptions, like why do we have conviction that it's a 3%, kind of growth in year one versus four versus two? And so we have that same thing in the financial model side. There's a tab that lists all of the assumptions and it shows you where it's pulling that information from. And if it made its own determination based on market data, you see that as well. So the citation level information is really critical so that you do have human in the loop and you have people who are then able to say, okay, I agree with this determination. I don't. I think we need to, reevaluate, how, we're thinking about the comp set or how we're thinking about rent growth. So at the end of the day, it's always in the principal's hands to, make those decisions, make those changes to the models. But AI is great at getting you to the first pass of that stuff.
So now this is a question, and a lot of people that are employed by companies that are out there that are implementing AI, that their biggest worry is, well, is this going to replace me? Which I mean, I can see that writing on the wall. I'm sure they probably can see it as well. Why are they going to need some of these people? And how many people do you think it's going to, let's say, an office that has like 50 people working there. How many people do you think are probably going to go bye-bye at some point?
Yeah, and I've thought pretty deeply about this. Obviously, building AI software, having started my career as a financial analyst, right? That was my role at Disney. That was my first role in real estate. And so when I think about, the late nights that I spent at Disney on the Pixar, deal, till 2 in the morning, probably for 3 months in a row. Most of what I was doing was not the really important work on, okay, what are the core assumptions? Like, what are the things that are actually going to make the acquisition of Pixar a success? It was a lot of, dealing with the, minutia of the giant financial model that we had built out, making sure it worked, making sure it all ticked and tied. And so there was a lot of manual work that was done there that really wasn't like the important work around, really figuring out like, was this, kind of a good deal or not. So I think that a lot of the stuff that is more manual and probably the least fun part of financial analysis work is going to largely move to being done by AI. I think what is unclear, right, Rick, is okay, do you need fewer people, in that analyst, team? I think you absolutely still need analysts, but I think it will enable you to do more with less. What we see with most real estate firms, and I can attest this, with ones that I've worked at, they're pretty lean, right? So I think when we talk to these groups, they're not really talking about like cutting heads, but I think they see this as a way that they can accelerate what they're doing, maybe without having to hire up as much as they might have in past cycles. So that's where there will be some tension there, and I think that to your audience who's thinking about what the future looks like, I think what employers are going to be looking for across almost every job are people who have familiarity with these tools and understand how to prompt these tools, understand how to, how to do the human in the loop things that we've been talking about, really, getting into, tracking what's happening with these things. So I think that there's going to be a lot of job opportunity for people who understand how to use these and can apply them to their, to their roles. But there's going to be, I think a bit of change over the next, few years. That's pretty hard to predict right now, how that all plays out.
So it's more or less not a matter of cutting staffing. You're implementing staffing that is more AI knowledgeable, as well as now instead of being able to handle the 10 clients you handle, you can handle 20 clients. So, I mean, you're going to do more business with the same amount of staffing, basically.
Yeah, and I think it's really empowering for, smaller to medium-sized organizations, right? They're going to be able to compete against and punch above their weight, against some of the large organizations. Right. I think this is an interesting thing we're seeing play out because of course also large organizations, some of whom we work with, right? they have more processes. They have deeper concerns about their data and how that's housed and what that sort of means in an AI world. And so they're moving slower to adopt these things, as you would expect. But I think for the smaller to medium sized groups, it really allows them, exactly to your point, right? It's like if they were doing 10 deals, a year, maybe they can now do 20, or they were, looking at 100 deals a quarter, they can now look at, 300, 400, 500 deals a quarter with the same size team, and also give their team, I think, a better work experience, right? Where they're not having to spend most of that time, in the extracting numbers, making sure it all kind of fits into the financial model the right way. And, that was definitely not my favorite part of, being an analyst.
Well, so you're saying that a smaller company now can become more or just as competitive with some of the larger corporations.
I think 100%. And I mean, we talked a bit about data earlier, right? And so, data, big data has been sort of one of these themes that, I remember early in my career at Disney. It's like, people have been talking about the potential of big data for a very long time. And it was something that the largest companies like Disney could take advantage of, but it costs a lot of money to really build out a company that leveraged big data, because you needed data science teams, you needed a lot of infrastructure and technology costs. And now in a world of AI, as you said, like AI enables you to extract data and do these things in a much more straightforward way. You don't have to pre-process a ton of this data. You can throw OM's messy data into Acquios and pull all of that information out, directly into your model. It doesn't require, kind of all this like mapping that needed to be done previously with a lot of data systems. So that's a huge advantage for these, smaller companies. We've talked to some of the largest, real estate groups who've spent, tens of millions of dollars structuring data over the last decade, right? To kind of, in a pre-AI world, that was what you had to do. And now, a lot of this stuff can be done pretty cost effectively, and enable smaller companies to really punch above their weight, I think.
So, and I know you mentioned this. So, if someone's interested in finding out more about Aquis, uh, is there a website they can go to? I think you
Yeah,
mentioned it
absolutely.
earlier.
Yeah, absolutely. I think the best source there would be Acquios.ai. So it's ACQUIOS.ai. And you can also, find me, David Fields, on LinkedIn. Would be happy to chat. Happy to do kind of live demos. We also have a freemium environment where people can, try it out and try a few deals and kind of understand, what the underwriting can look like and how quickly that can happen for them with the platform.
Well, thank you very much, David. Very informative. We're talking with David Fields, and he is the CEO of Aquis. Yeah, I probably didn't. I have a Boston accent, so that's how I would say it in Boston.
Oh,
Aquis.
that works. That works. Well, thanks so much, Rick. This has been a lot of fun, and appreciate the time.
Well, I thank you all for listening today. You're listening to the NEREJ NYREJ podcast. I'm your host, Rick Kaplan. Today's podcast is sponsored by Cassidy Paving. Contact Cassidy Paving at CassidyPaving.com for all your paving needs. To be a sponsor on our podcast, contact me at rkaplan at nerej.com. And until next time.